On November 2, 2022, FTX was valued at $32 billion. By November 11th, just 9 days later, it had filed for bankruptcy. This is the story of Sam Bankman-Fried and FTX, how a 30-year-old MIT graduate built one of the world's largest cryptocurrency exchanges, then lost it all in what prosecutors called one of the biggest financial frauds in American history. But this isn't just about cryptocurrency, it's a case study in how brilliant minds can rationalize terrible decisions. Samuel Benjamin Bankman-Fried was born in 1992 to two Stanford law professors. At MIT, he studied physics and mathematics, graduating in 2014 with a reputation as brilliant but unconventional. After graduation, he joined Jane Street Capital, a prestigious quantitative trading firm, where he learned high-frequency trading and arbitrage opportunities. Bankman-Fried embraced effective altruism, maximizing earning potential to donate more to charitable causes. This philosophy would later become central to his public persona. In 2017, Bankman-Fried noticed Bitcoin trading for $10,000 in the United States, while simultaneously trading for $11,000 in Japan, a price discrepancy traditional markets would never allow. He left Jane Street to found Alameda Research, focused on cryptocurrency arbitrage. The firm generated over $20 million in profits in its first year. As the cryptocurrency market grew, so did opportunities. But Bankman-Fried identified a problem. Existing exchanges were poorly designed and unreliable. In 2019, he launched FTX, Futures Exchange, designed by traders for traders with advanced features no other exchange provided. Growth was meteoric. Within 6 months, FTX processed over $300 million daily. By 2021, it was the world's second-largest cryptocurrency exchange. FTX invested heavily in marketing, endorsement deals with Tom Brady and Gisele Bündchen, $135 million for Miami Heat Arena naming rights, Super Bowl commercials. This was funded by massive venture capital investments. FTX raised $400 million in January 2022 at a $32 billion valuation from Sequoia Capital, SoftBank, and major institutions. Bankman-Fried became the face of responsible cryptocurrency leadership, testifying before Congress and appearing on major news programs. Behind the scenes, FTX and Alameda Research were intimately connected in ways not disclosed to customers or investors. Alameda had special privileges other users didn't possess. Customer deposits on FTX were being used to cover Alameda's trading losses. When customers deposited cryptocurrency, those funds were being lent to Alameda for high-risk trading. This relationship funded an increasingly lavish lifestyle despite Bankman-Fried's public image as someone unconcerned with material possessions. Bankman-Fried became one of the Democratic Party's largest donors in 2022, donating over $40 million using funds prosecutors later alleged came from customer deposits. The beginning of the end started in May 2022 with the Terra Luna collapse, wiping out $60 billion and triggering a broader crypto crash. The turmoil hit Alameda Research hard. Instead of closing positions, the firm doubled down on increasingly risky bets. On November 2, 2022, CoinDesk published a report revealing Alameda's balance sheet was heavily concentrated in illiquid FTT tokens, raising questions about solvency. The situation escalated when Binance CEO Changpeng Zhao announced on Twitter that Binance would sell its FTT holdings due to recent revelations. This triggered panic. FTX customers requested withdrawals in unprecedented volumes. $5 billion on November 6 alone, far more than sustainable. By November 8, FTX paused withdrawals, citing technical difficulties. The reality, the exchange didn't have sufficient liquid assets to meet redemption requests. Desperate rescue talks with Binance failed after due diligence revealed the extent of FTX's financial problems. On November 11, 2022, FTX filed for bankruptcy, initially estimating $3 billion owed to creditors, but the actual shortfall was much larger. Bankman-Fried was arrested in December 2022, tried in October 2023, and found guilty on all 7 counts of fraud. He was sentenced to 25 years in federal prison. The collapse left over 1 million customers unable to access their funds, ordinary people who had trusted FTX with their savings and retirement money. The collapse prompted regulatory responses worldwide, with new requirements for exchanges to maintain full reserves and segregate customer funds. The broader cryptocurrency industry suffered significant reputational damage, with institutional investors retreating and public trust declining substantially. FTX's collapse highlighted the importance of proper corporate governance and risk management, fundamentals that rapid growth had allowed the company to overlook. Today, exchanges implement stronger safeguards and regulators develop clearer frameworks, but fundamental questions remain relevant beyond cryptocurrency. The story reflects broader patterns: glorification of young entrepreneurs, pressure to grow at any cost, and overlooking fundamental principles for revolutionary change. Most importantly, FTX serves as a reminder that trust must be earned through transparency and accountability, not celebrity endorsements or charismatic leadership. The question now is whether these lessons will prevent similar collapses, or whether each generation must learn these truths anew.